One. Welcome to the Small Cap Discoveries Quick Pitch. This quick pitch is on Immunoprecise Antibodies, which trades on the TSX Venture Exchange under the ticker IPA and on the OTC under IPA-TF. Welcome, Paul, and why don't you tell us a little bit about Immunoprecise?
You bet, guys. Thanks, Trevor. Most of you guys know that this is a stock we've known for a while. This is a stock that we introduced a couple years ago when it just went public. The reason we wanted to bring it back to everybody today is I think we've come to finally see some of the fundamentals in the company that are what we've been kind of hoping for a while, and now starting to kind of show the promise that we were talking about a few quarters ago. And specifically, their financials came out on Friday, their year-end numbers. And one thing I've got to mention before I get too much further into it, I do have to say a disclaimer. I am a director of the company, and I'm also a very significant shareholder. I think if you review my insider trading reports, I have roughly 3.5 million shares, and then some warrants and options. So it's a very significant position. So it could look like I'm talking my book here, but nevertheless, we'll stick to the facts, and we'll tell you why I like it, and I continue to like it even more now. So as I said, the financials came out on Friday. We saw for the year, we saw a 29% year-over-year growth in revenues. It's significant this year because that was all organic. So the past couple of years, it's been growing mostly through M&A. But now that all three sort of the entities are fully integrated, we're starting to see some decent top line growth. Apart from the 29% growth for the year, the points that are even more important is that if you look at Q4, Q4 saw 57% year-over-year growth. So we're actually starting to see some acceleration in the revenue, and that's one of the key things that we always look for in our sort of companies that we like to invest in. Is we want to see what we call hyper growth, and usually we call that 25% or higher. And when you start looking at a quarter-over-quarter or sort of year-over-year basis, on a per quarter basis, when you start to see that acceleration, it usually means that there's something underneath that's starting to sort of rapidly take hold. Now this is the second quarter in a row that we've seen year-over-year growth of over 50%. So that's another thing that we look for, is we want to start to identify these sort of trends, these revenue and earning trends. We want to try to find them early, and I think we're starting to see that here. The other key points to look for is we saw a 52% increase in gross profit year-over-year for the full year, very significant. Gross margins improved from 48.5% in 2019 to just over 57% in 2020. So not only are we starting to see revenue growth, but we're actually starting to see some margin expansion. You get those two things going together, and you can see a pretty meaningful impact on the bottom line. And we did see that. So for the year, this was its first EBITDA profitable, well, adjusted EBITDA profitable full year, just over $50,000 on an adjusted EBITDA basis. That's close to a $3 million improvement on the bottom line. So you can start to see how much of an impact we're starting to see. And keep in mind, all that growth and improvement margins has been in parallel with their acceleration in their R&D in building out the COVID assets and some of the other assets that they've been building out inside of Talem. Okay, so that was a nice improvement on the income statement. The balance sheet improved as well. However, the bulk of the balance sheet improvement came from there was a $2.6 million convertible debenture that was sort of taken out to pay off a $2 million non-convertible debenture that came due. So that cleaned up that short-term obligation. Company also made some deferred acquisition payments that were due for some of the acquisitions they made a couple years ago. But subsequent to the end of the fiscal year, they also ended up raising through the exercise of warrants. Let me see. where did I put my numbers here? Yeah, about $3.7 million in additional cash came in through the exercise of warrants. And some of those warrants, there's about 7.4 million warrants that are still due and will expire, and this is important, September 24th, so in less than a month. So we've got to be aware of that. Now, I suspect that a number of those will be exercised through the market, so that could bring about some short-term weakness, which I think could be an opportunity here. So yeah, so we've got those warrants. The other thing that's happened to improve the balance sheet, or at least improve the future spend, is they received that $1.5 million US grant from the North Dakota government. That has to specifically go towards their COVID R&D. It's a program where they're required to spend 25%, so it's partly matched. So you know that means that they've got a spending obligation of $500,000 as well, US. So, but still, $1.5 million. That's going to go towards developing their COVID assets. The other thing that happened last week on IPA, which is of interest, is they got their first research coverage. Technically, their second research coverage, but this is the only company following them now. Industrial Alliance came out and issued a buy recommendation with a $2.10 price target. If you have an opportunity to see the report, you're going to find that that report just really covers the CRO part of the business. So they're really giving zero value right now to the COVID assets. I would argue that COVID assets could technically be worth as much, if not more, than the actual CRO business. So in my mind, you sort of get the CRO business for that kind of price, but you get everything else for free. So great optionality there. What else can I tell you? Yeah, I think it's sort of, I'll summarize a little bit, maybe leave it at that, but you've got here what we typically look for in a hyper-growth potential multi-bagger is a company that's starting to accelerate its rate of growth. It doesn't have to burn cash to do it. So now that they're adjusted EBITDA positive, I suspect that at every quarter that we go from here, they're going to be adding cash. So you've got an accelerating rate of growth in their revenues. You've got a sort of a self-funding company now, and a very strong balance sheet through the exercise of those warrants. Government funding that's coming in that should help alleviate any sort of non-CRO business burn, and the upside or optionality of those COVID assets. So I can't. I mean, I really like what I see here. Again, I may come across as talking my book, but these are the key criteria you have to start to look for if you're going to look for that multi-bagger, because I think from here on in, you're going to see extreme leverage to the bottom line. If they can maintain this sort of 50% type of growth rate, it's going to grow very quickly. It's going to compound very quickly, and I think it's going to get the attention of the market very quickly. So really happy with what I saw in this quarter. We won't have to wait too long to see what the next quarter looks like. Q1 should be out in about a month and a half. And there, I've almost lost my breath, as you can tell how excited I am about this. Yeah, I think we've got something that we've got to keep a real close eye on, because I think we've got a pretty big winner here.
And Paul, just a quick few notes. How scalable is that CRO business?
So it's very scalable. Most of the expenditures they've had in the capital, sort of the CapEx side, has really gone towards sort of what's the word? It's not computerizing it. You know, a lot of the equipment they've got in place takes out a lot of the labor components, so it allows for a lot of scaling. The biggest issue with this business has less to do with what their sort of technical capability is now. It's how you onboard your big clients. There's been enough presentations that Jennifer's given where she's mentioned that we right now have at least 13 of the top 20 largest pharmaceutical companies that have been onboarded over the last year to year and a half. Why that's important is they don't start off with their full spend with you. They start off slow. So the fact that we've got those clients on board, I expect to see a pretty significant increase in their spend, and that will have a major impact on the revenue growth going forward. So they don't have to go out and get a whole bunch of new clients to do this. I think they're, even if they maintain their current client base, they're going to be able to grow their business quite a bit, and so that's very scalable.
And Paul, what does a company like this do with cash on its balance sheet?
So the company will have an opportunity to do a couple of things. One is the Talem assets that they're building out. So the different therapies and vaccines, they can really start to accelerate some of the opportunities they have in that space. That's some pretty significant upside if they're successful in partnering or selling any of those assets. That's one thing they can do. I'm sure that will happen to some degree. The other thing they can do with any excess cash is there's a lot of M&A opportunity in the space, either by buying another small competitor, or more likely to go after some new technology or some other service technology that they can bolt in and bring to their client base. So I think it's likely to be one of those two things.
And where does the big optionality, or where's the blue sky in this business? What really gets it? What really gets it up there?
Okay, so another reason why I love this business is that you get a little bit of both. So the CRO business, or the contract research organization side of the business, is really sort of the bread and butter stuff that they're going to be able to grow on a consistent basis and grow into something pretty significant on its own. But the big upside and the big blue sky is any of the internal assets that they build out could have the potential to become, they call them biobuck deals, but you see these deals where these small biotech companies develop an asset or developing a therapy or vaccine, and then a large pharmaceutical company or big entity in the space will come in and buy that asset for, in some cases, billions of dollars. So that's the optionality. That's the big upside. And I didn't do a good job of really describing what the business really does. I'll take 10 seconds to kind of do that. Immunoprecise is really a CRO, or a contract research organization. What they do is big pharma and biotech come to them to outsource the early stage R&D for antibody development. The company's done it for years, for over 25 years. They're specialists at it. And there's a massive tailwind in the industry right now because so many of the big pharma don't have that specialty in-house, and what they do is they outsource it to companies like Immunoprecise. So not only is the outsourcing becoming a big tailwind, but just the growth in antibody therapies and demand for antibody therapies is growing extremely fast, and Immunoprecise is able to capture both those sort of trends. The other key piece of Immunoprecise is they've taken all that expertise, and instead of doing these R&D programs for large companies, they're starting to do them internally. They take these small assets, they build them out, and then they go shop them around to these pharmaceutical companies. So you get kind of the best of both worlds. A service provider, sort of steady growth in revenue from a service provider, and then you get the upside of these biotech potential lottery tickets. You get both in this company.
Got it. Thanks, Paul. And do you see this company listing on any other exchanges, or what are your thoughts there?
Yeah, so they haven't hidden the fact that they're going to start looking at uplisting to NASDAQ. We should be hearing more about that in the next little while, but the real reason behind that is, most Canadian biotech or healthcare companies kind of languish because there's not really a very well-developed healthcare sort of investment community in Canada. So most of these successful companies, like Zymeworks, I mean, I could probably list a couple of them if I really thought about it, but you go to the U.S. market because it's a much more developed healthcare and biotech market, and you get a much higher valuation and a lot more funding for these type of companies. So yeah, without question, I suspect you're going to start to hear more and more about a NASDAQ, potential NASDAQ listing.
So Paul, you've got quite a lengthy history of picking stocks, and you've got a pretty good record for yourself. What gives you such conviction in this company specifically?
The key is that it's, well, a few things. The industry tailwinds, it's always nice to see some sort of, yeah, growth within the sector or growth within the niche. This is a very rapidly growing niche within a rapidly growing sector. So you've got that going on. But what really interested me in the beginning here was that I could tell there were a lot of assets that weren't properly monetized. When Jennifer, the new CEO, came on board with her industry experience and where she saw the potential for the business going with just what they had, it got me pretty excited. But it was really based on the idea that we could grow the core business at, at hyper rates. And now that we really start to see it happen, that's what's starting to juice me right now. They're really starting to hit. They've got some new products, some new services, new customers, new markets they're starting to go into. You put that all together with the tailwinds that they've got, and you got a recipe for a lot higher share price.
Great, thanks, Paul. Any other final takeaways?
No, I think, you know what, the other sort of sizzle to the company right now, obviously, is the COVID assets that they're developing. There's a lot of noise, obviously, around that right now. I think that's something to keep an eye on. But I think if you peel that away, just the core business, if you can get excited about anything, it's the core business. That's not a what if, that really is happening now. And if you look back at any of the real strong long-term multi-bagger stocks, most of the common denominators show up, and they show up here. And the big one is the fact that organic revenue growth is now, we've had 2 quarters of it over 50%. I think that's what we've got to key in on here.
Great. Thanks again, Paul. And for our subscribers, this is a company that many of you do know about, but if you don't, the stock is trading at $1.75 with about 74 million shares outstanding, or about $130 million market cap. The stock this week alone has been up about 25% and is up about 200% from the past 12 months. So again, thanks for tuning in to this quick pitch on Immunoprecise antibodies, and thanks again, Paul.
You bet. Thanks, Trevor. See you, everybody.